You're watching Stockwatch. I'm Simon Brown. Joining me to unpack your stock-related questions today, Chantal Marx, F&B Wealth and Investments, Rowan Williams, Nitrogen Fund Managers. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, on Twitter @BusinessDayTV, #Stockwatch. Chantal, Rowan, appreciate the time. Rowan, let's kick off with you, and I want to look back to last week. A lot of data coming out of the US, GDP, FOMC, unemployment. Anything particularly, I mean, GDP maybe a little better, FOMC, no surprise, unemployment a little weaker, but did anything sort of jump out at you?
Yeah, I think there were two interesting points on the FOMC. It was the first time in a number of years that there were dissenting views in terms of the decision. And I think that points to sort of, the state of the fractious relationship between the Fed and the incumbent presidency, and really some of the tension there around a rate cut, and I guess that is going to continue to grow and ratchet up. That was actually amplified by the jobs figures because of those revisions of the prior 2 months. You saw quite a big fallout. The head was fired and replaced, and the jobs figures were quite disappointing. There was sort of a knee-jerk sell-off on Friday afternoon, but that's been followed through today by an actual recovery, as now the market prices in or increases the probability of a cut. So I think the unfolding of the events was quite interesting, and it does point, I think, to the US economy starting to soften, and I guess the likelihood of cuts probably being more likely. Obviously, the other big news flow was August 1 and obviously tariffs, and how that's going to unfold, I guess, the impact on South Africa as well. So certainly quite a big week on global and local markets.
Yeah, and I must say the firing of the head of the Bureau of Labour Statistics, I don't know, a bit banana republic perhaps. Chantal, for you, I mean, there was a ton out there, and I mean, I'd forgotten, I mean, tariffs, I hadn't forgotten them, but of course, I mean, is there anything that stood out for you over and above that sort of either good or bad?
Yeah, I mean, there were a few things. Obviously, we were watching the FOMC quite closely. From a local markets perspective, MPC was very interesting. And there also seemingly a bit of divergence in thought process between the MPC and National Treasury around that inflation target. So that was quite an interesting one. Then, of course, we had US earnings season in full swing. A lot of the big tech companies releasing results looking really strong across the board. Perhaps just a little bit of disappointment for Amazon, because their very big cloud business is now growing slightly at a lower rate than peers. So broadly speaking, earnings news flow was quite positive, and everything else was just chaotic.
It was just chaotic. Chantal, and it is that debate against anchoring versus targeting, but really the semantics to the politicians. Tariffs, Chantal, I mean, I've been looking through it, and I mean, Impact's going to get hurt a little bit because they sell the containers, the citrus fruit gets packed in for export and stuff. But I don't see any JSE stocks that are going to have their earnings obliterated or even severely impacted. Am I missing something on these tariffs? I mean, they're not good, to be clear, but I don't see any major impact to any listed companies.
Yeah, I mean, we don't have BMW South Africa listed on the JSE, and I think that really helps. When we look at the JSE specifically, the exposure is quite secondary. So you'll have a company like Metair that is very exposed to vehicle manufacturing that will see an impact if that demand drop-off actually materializes. So there you'll have an impact. Some of the exporters could be impacted if they have an exporting relationship with US companies. So there I'm thinking perhaps a little bit on the pharmaceutical side, companies like Roynette. But I mean, it's actually quite small, because we don't have a lot of big exporters that are actually listed on the JSE. And as you mentioned, Impact selling into the citrus farmers who may be forced to export less unless they can make a bit of a change in what they're doing.
Rowan, is there anything we're missing? I mean, again, copper, I agree, but it's going to be small, right? I mean, maybe the farmers earn a bit less and spend a bit less. Is there anything that we're missing in terms of potential impact on listed companies?
Yeah, you do have to sift through the details. So, and it's parts of businesses. So, Bidvest also
Yeah.
on their sort of the freight operations may be slightly impacted. It's at the margin. Cup, they are a bit exposed to the motor manufacturing supply chain, so they may be affected. I think a lot of this has been known by the market and sort of has been priced in. So you saw on the day sort of some, or last week, a little bit of volatility as it became, I guess, ultimately the 30% tariff rate was somewhat disappointing for South Africa's, particularly compared to some of our other African neighbors. So overall, yeah, I guess it's known now. So maybe some of the volatility is out the market, and companies can plan accordingly. On the positive side, the government has said they would provide some sort of supplier support. So I think hopefully, yeah, the uncertainty is out the way, and the both companies in the market can move forward in terms of planning, and that'll take just some of the volatility out of the picture.
Rowan, next day with you. Question came through. Impact results out today. Can you ask the panel their expert opinion? I bought it 4 years ago, and it is exactly the same price I paid back then. Rowan, Impact and your thought on the results?
Yeah, I think it's been somewhat disappointing. I mean, they've got some nice areas to the business in terms of that fruit export value chain and doing the crates for that. You thought there would have been some growth there, which I think there has been, but it just shows you that the local manufacturing sector is sort of low growth, no growth, and is a tough place to be. And I guess 4 years of no share price growth sort of reflects that. So they've done a lot of investment, which looked quite promising and sort of had decent sort of return payoffs. I think that still has to come through. But what we need to see is economic growth. I think there's a lot of capacity. Yeah. The companies have cut costs. They're reasonably efficient investments in solar generation, etc. But yeah, no growth, so there's going to be no margin expansion. So I guess it's frustrating for both the management and the investors. But unless we see sort of, and this tariff is a bit of a headwind, unfortunately, to that case in point impact. So it's, yeah, I think patience is required, or you've got to look to those sectors that are experiencing growth. And unfortunately, manufacturing is not one of them at the moment.
Yeah, and what they would love in their life is a little bit of GDP growth. Chantal, Impact for you?
Yeah, I think if we look really long term, they have massive capacity. They've invested in their capacity and in streamlining their business lines. The cost base is, I think, trimmed quite nicely as well, which means that as soon as you get some economic growth and some support for revenue, you're going to get a massive expansion in margins, and I would think that they would perform very, very well. At the same time, the stock is extremely cheap. So that cheapness reflects the fact that we don't have good visibility in terms of GDP growth going forward, I think. But there are things to be positive about when we look at the growth outlook for South Africa. Operation Vulindlela 1.0 progressing exceptionally well, 2.0 kicking off, and we'll start seeing the difference we've already seen the difference in electricity generation. We'll start seeing the difference in logistics and other network industries as well pretty soon, and that could trigger growth. But again, it's a coulda, woulda, shoulda. But if you're a very long-term investor and you don't have a major portion of your portfolio exposed to it, I think it's something you can hold on to. It's not expensive.
Chantal, let's stay with you. Question coming through. Please ask your panel their view on the education sector, particular COH, Curro. Most folks are preferring either an Advotech or a Stadio. Chantal, education stocks for you?
Yeah, I mean, so I really like the sector. I think there's a structural kind of support for it because we are unable to build schools at a pace fast enough to sustain population growth in South Africa. And similarly, on the tertiary side, I think tertiary is more attractive just because you don't have so much dead space when you're looking at a campus. So your maintenance requirements and your utilization of assets is a little bit better. And that's why a Stadio or an Advotech will trade at a premium to a Curro. That said, Curro, I think, looks very, very cheap at the moment. It's probably the best priced out of the three stocks. So it is a company that I am closely monitoring. I haven't pulled the trigger yet because I think momentum is still quite downward. We do have a situation where economic growth is kind of moving sideways. Enrollments have stalled a little bit, but certainly the long-term potential is there.
Rowan, your take on our local education sector?
Yeah, so this is one of those sort of sectors I was referring to in terms of secular growth. So I think you are seeing that enrollment numbers have been good. They've got some pricing power. They can increase annual fees. There's good demand, particularly in the tertiary space. So you've got growth there, and you are seeing good earnings growth momentum, particularly, I guess, yes, more on the tertiary side. And then I guess in the case of Advotech, they are expanding into Africa where you're seeing growth as well. So I think that's quite exciting. Our preference is, I guess, a mixture of value and growth, and we think Advotech reflects that. So not excessively priced. Stadio's got quite expensive from a rating perspective. Good exposure to the tertiary sector, exposure to a growing Africa sector. The schools business is also good and solid. So overall, I think a sort of P peg ratio, P to growth ratio of less than 1, we think is quite attractive here. It's sort of it's moved sideways, had a very strong run, Advotech. Their results, I think, are coming out in the next 2 weeks or so. So we'll see if they maintain their earnings trajectory. But it looks like an interesting entry point, and we quite like it at these levels.
Rowan, next day with you before we head to break. Question coming through. Novo Nordisk. I watched it going all the way up and completely missed it. Now it's down a whole truckload. Forward PE around 12. Surely now it might be worth a look. Novo Nordisk for you, I mean, it is down 60+% from the highs. That might have been extreme. Is there opportunity here now?
Yeah, so I think a cautionary tale in terms of growth investing, where sort of the growth doesn't materialize and you can see what can happen to a share price. So sort of, I guess, contrast to the tech companies that have delivered on their growth promise. But a lot is happening in the sort of semaglutide space in terms of alternative medicines and alternatives moving to potentially tablet form and different applications. So I think it's very mixed. So I think you've got to take a very close look. Are they going to continue with their strong market position, notwithstanding sort of the substitutions and alternatives? So yeah, I would still be quite cautious. I think there's too much innovation. Obviously, the US administration as well, getting negative in terms of prices. Yeah, it's quite a complex investment case. We would think there'd be easier ones to call than that.
Chantal, Novo Nordisk.
Yeah, so we've had a perfect storm for Novo Nordisk over the last few months. So the first thing it's actually something that's been plaguing them for a while, but these compound manufacturers that kind of copy medicines have been allowed to run riot in the US in terms of basically producing what Novo has a patent on because of under the guise of a supply constraint. There is no longer a supply constraint, but the FDA hasn't really stepped in to enforce that change. So the market is being flooded by basically counterfeit product. You also have actual counterfeit product flooding into the US from China. And then you do have the situation where Eli Lilly has been gaining market share quite steadily in the US as well. There were a couple of other missteps. They had this combo with a company called Hims and Hers that they've cancelled. They messed up their Canadian patent application, and now the CEO has been fired. So it's been a rough few months for them. The stock doesn't look expensive at current levels, but we are very skeptical around the growth profile. As Rowan also said, a lot of competition coming into that space. Will they be one of the leaders when it comes to an oral application? At this point in time, these weight loss drugs are mainly injectable, but the total addressable market is quite substantial. They have been a leader in the past. The change in leadership could be good for them. So my conclusion is, in the absence of better ideas, if you have the stock, you can hold it. But if you find something with a more compelling and certain growth profile, it's probably worth taking your money and running.
Yeah, a lot of confusion. And that Canadian, it was a $250 fee they had a year to pay and didn't pay it. So, I mean, yowza. Chantal, let's stay with you. Question coming. City Lodge, it seems to be stuck in that 4 to 5 rand range. That's fine. I can buy it around 4 and make some money. But is it ever going to break higher? Chantal, your views on City Lodge?
I love City Lodge, and I've been very disappointed by the share price. And the bigger reason why you haven't seen City Lodge run as much as a Sun International or a Southern Sun is that its exposure to international markets is a little bit lower. It's historically been like a business travel and kind of short-term travel hub. And obviously that fell off dramatically post-COVID. Also, they got into a bit of financial trouble post-COVID, which I think is very understandable. And they fell behind with their refurb program. But they've since introduced a food and beverage kind of offering that's been very well received. The refurb program is progressing nicely. City lodges are looking nice, the ones that have been made over. And they're starting to appeal to a different audience. They really are pushing leisure travel above kind of the business kind of traveler at this point in time. And I can see that over time, perceptions will shift around City Lodge. So I think at this point in time, it looks really cheap. I think they're going to probably bumble along for the next couple of years, but I can see a scenario where it can re-rate to similar multiples as a Southern Sun. It falls in really nicely from an affordability perspective as well. So a lot to like, but I mean, the market still needs to get excited and animated around the story.
Yeah, and actually not a bad dividend yield either. Rowan, your thoughts on City Lodge?
Yeah, I think what you're seeing is quite a few of these South African sort of domestic focused companies with low ratings, good dividend yields, but sort of just lacking that growth impetus. And I think City Lodge is somewhat of a proxy for sort of the South African consumer environment, as Chantal said, less exposed to international travel, which has been fairly strong and I think is a growth area. So yeah, I think it needs to deliver on some growth, and then that re-rating can take place. So again, I think it's like a wait and see. We're waiting for this economic growth that will fuel the consumer and sort of leisure activities and increased occupancies, which have, they unfortunately haven't really picked up yet. So, and that's what drives earnings. So we prefer, the other ones that were mentioned because of the exposure to international travel and to some extent online gambling. But yeah, this could follow. If the tourist returns.
Yeah, and again, if we got some local GDP, Rowan, question coming through. Alphabet results looked really strong. Definitely the cheapest of the Mag 7, in brackets, excluding Tesla. Worth a look. Rowan, Alphabet, they were good numbers, and it's a sub 20 price earnings.
Yeah, I mean, it does look, especially when you compare it to, say, a Microsoft and the rating that has, it does look, relatively cheap. And the numbers were good. I think, obviously, the market's been concerned what would be the impact of AI and AI searches on internet advertising. And there has been some changes there, but I think Google's done a good job of addressing that, and obviously with their Gemini offering and also their cloud offering, which have seen extremely strong growth. So I think Google and Alphabet, it's a great operation. They're almost too relevant to not be to remain relevant and be part of the ecosystem. So yeah, we like it, and I think for us, it does represent the best value, say, of the Mag 6 or Mag 7, whatever you want to call it, of those real tech companies. And I think we think it's worth a very close look here.
Chantal, Alphabet for you?
Yeah, I also like the stock. I think it's very cheap relative to the rest of its peer group, and it's delivering on the capex expenditure that they've put in place over the last few years. There were a lot of concerns that search was going to drop off because of AI, but I think that the enhancements that they've actually made to their search engine with their own AI capability has been really good. I mean, it's been a few months, but I can already see the difference, and it's making me more efficient. I'm an elder millennial. I'm still Googling. So yeah, I mean, I think that they're doing well there. And then, as Rowan also mentioned, the cloud story, it's just been very surprising. It beat market expectations by quite a margin. So yeah, I think a lot to be excited about, given the fact that the company is trading so cheaply relative to its peers.
Yeah, absolutely. And I remember their AI rollout, was it 2 years ago? It was an absolute disaster, but they've certainly made that work. Chantal, another question coming through. Strong July vehicle sales. I think it was the highest since pre-pandemic, back above 50,000. Would your panel have a preferred vehicle retailer? And maybe, I mean, we've got the new one, CMH and Motus, and then of course there's Supergroup, still got their some operations, and then of course We Buy Cars, which is the second hand. Have you got a preferred, Chantal, motor retailer?
Yeah, so I mean, I really like We Buy Cars just from a structural perspective. The stock is a little bit on the expensive side, though. And if we're talking about new vehicle sales exposure and a lift in new vehicle sales, that could be at the expense of used vehicle sales. So We Buy Cars, long term, absolutely, yes, 100%. But I think if you're looking at kind of the new vehicle sales or the new vehicle exposures, Motors would be your most leveraged. So that company should take the most advantage out of an uptick in new vehicle sales. And then we have to see what cars are actually being sold. So you'll have to take a careful look at those numbers. And depending on what cars are selling well and which companies are quickly repositioning to fill in that gap, I think that will give you your answer there as well, because we know that Chinese manufacturers have moved in quite aggressively in South Africa, and our retailers haven't sat on their laurels. I mean, they've gotten involved. So we'll just have to take a closer look there. But I think Motors is probably the one that will benefit most.
Yeah, and I saw, I mean, Mahindra in the top 10 now, I mean, at number 10. But I mean, it is just, the cheaper vehicles. Rowan, have you got a preferred local vehicle retailer?
Yeah, so I mean the numbers were quite astounding actually. The sort of size of the growth, and I think it may be in terms of what we've been speaking about earlier, some green shoots in the local consumer economy. They tend to be a leading indicator, so there's that to consider. But in terms of the individual stocks, I tend to agree with Chantal. I think Motors is the most sort of geared to improving demand, and that will follow through sort of into the services business as well, and sort of the medium terms in terms of that car park. Supergroup's also quite interesting. I think they've done quite a good job in positioning themselves at that lower end car market. They've got quite a good exposure to Suzuki, although some of the Chinese brands are now starting to take market share as well. So you do have to take a closer look. So I think you could maybe not choose and pick all three. So see a bit of CMH, a bit of Supergroup, a little bit of Motors, and you'd get exposure to that broad uptrend in new car sales.
Quick before we go to stock picks, Rowan, FirstRand got some victory in their UK court case. This is about their vehicle finance and the like. A question came through. I was worried about it, so I held back not buying FirstRand, but now I'm regretting my decision. Is there still value here? Would you still be looking at FirstRand at around, the 78 Rand level?
Yeah, so it was interesting, that news flow. I think overall it was positive because the worst case scenario wasn't realized, although interestingly enough, they hadn't provisioned enough, it seems, in terms of what the actual outcome is ultimately going to be, which I think will only be determined around October. So sort of bittersweet in a way. So I think, yes, we like the South African banks, just in terms of their valuation. And again, we're speaking about the local economy, the exposure to the local economy and where they are in the cycle. So, and it is a good entry point. The share price has sort of languished because of this uncertainty. I think that now is starting to go away. So it should move up with an improving, hopefully improving domestic economic environment. And it's certainly a quality operation.
Let's go to some stock picks, Rowan. You're going with Exor, listed in, I think, the Netherlands.
Yeah, so it's the Agnelli family's holding company for the material asset is actually Ferrari, with the ticker race, and also Stellantis, which is largely Fiat and Chrysler, and some other interesting assets, Philips in health tech. So overall, it's been very volatile, partly because of the anticipated tariffs and the impact that would have on motor manufacturing, particularly exporting into the US. I think what's happened now is that has flown, and now we understand what the actual tariffs are. So in that volatility, the discount went to greater than 50% discount to its underlying NAV of those listed assets. So it's a really good entry point, and I think the companies can plan, the underlying companies can plan based on the known tariff environment and move up from here. So that's why we think it's a sort of double discount entry point into that sort of motor sector, and quite an opportune investment.
Okay, and it has got a whole bunch in its portfolio, including some Harmony. Chantal, you're going with the Foschini Group, and I think they've got a capital markets day later in the week.
Exactly. They have a capital markets day at the end of the week, and generally these capital markets days are well received by investors because the company gives you their long-term plans. They tell you what's really great about the company, and a lot of guys who are sitting on the fence, particularly from a long-term investment perspective, might decide to pull the trigger at that point. But that is not the only story here. The stock has been sold off in line with the rest of the retailers year to date, or over 1 year. I think we're down 30% for the clothing retailers in South Africa, even though we still continue to see pretty decent revenue growth and decent profitability as well. I think the outlook looks okay, but Foschini, I think, will probably benefit from some market share gains, the credit business, the new acquisitions that they have, the cross-selling opportunities between some of their operations from a credit rollout perspective. And I think that there's a lot to be positive about, and the share price is not reflecting that. I mean, leaders in local manufacturing when it comes to clothing, quick response, and the online platform also gaining traction quite nicely.
Yeah, and the price back at where it was 3 years ago, and we have to say, the South African consumer is better off than they were 3 years ago. Interest rates are down, inflation is down. That's all for Stockwatch today. Thanks to our guest Chantal Marx, FNB Wealth and Investments, the Foschini Group, Rowan Williams from Nitrogen Fund Managers, Exor. Up next, the close. Stay watching.